Alright, today we're going to be looking at IREN Limited, ticker symbol IREN, and as always, quick company description. It's an Australian-based AI data center and Bitcoin mining company. Although, ironically, if we go over to the data center locations tab, they actually have 3 facilities in British Columbia, Canada, and then 1 facility in Texas, USA. As of the 23rd of July then, the share price was around $18.99 with 224 million shares in issue, giving it a market cap of just around $4.2 billion. They have $184 million in cash, $324 million in debt, giving it an enterprise value then of around $4.4 billion. Also, just a flag, before we delve into the analysis, we won't be going through everything in this report, otherwise the video will just go on for too long. However, if you do want the document for yourself, you can go grab it down below in the description. The main revenue sources then can be broken down into 3 segments, being Bitcoin mining, AI HPC cloud services, and then energy sales. With Bitcoin mining, as you'd expect, being the primary revenue driver, the HPC just basically means high performance computing, and essentially all this segment is essentially just renting out high-end compute data centers, so like high-end graphics cards, to customers who are making AI tools. And then energy sales is just very simply selling back excess energy back to the grid, and it's quite minimal, and yeah, just earn some credit along the way. In terms of KPIs then, or key performance indicators, I would mainly focus on hash rates, or otherwise known as exahashes. And essentially what a hash rate is just a calculation, and an exahash is, I believe, 1 quintillion calculations, or 1 quintillion hashes. So then, as you can see here, the company had 5.5 exahashes, or 5.5 quintillion calculations per second it could perform, but this has now been scaled to around 50 exahashes, or 50 quintillion calculations that they can now perform per second. And I also did like a little list here, you can see with the other competitors. Obviously we'll go on to competitors later, but in terms of other competitors, kind of give you an idea of where IREN are. So you got like Cypher Mining could do around 8 to 10 exahashes, Riot is a popular one between 15 to 20, and the only comparable one is CleanSpark, who also do around 50 as well. In terms of the cost structure then, the major cost really is electricity, as you'd expect. They do operate, as I said, in Canada and Texas, and especially in regions and areas where there is much lower energy cost than, I guess, average, and especially here in Europe. So that then does allow for an average cost per Bitcoin, in terms of cash cost at least, to be around $30,000 per Bitcoin. And by cash cost, what I mean is we're not factoring things like depreciation, which obviously for a company like IREN, where they have a lot of computing power and a lot of computers and hardware, they have very, very high depreciation costs. The main competitors then are companies like Marathon, Riot, Bitfarms, TeraWulf. So basically other Bitcoin miners, and again we'd come on to the sector analysis here where we go in depth into that. But in terms of what differentiates IREN versus its competitors, in my opinion, things like scale. So as we've already mentioned, it has one of the highest hash rates in the world with around 50. The cost efficiency, given again it operating in Texas and British Columbia where energy prices are much lower. They also have infrastructure ownership, so they don't actually release their data centers but rather own them, giving more flexibility and less overhead costs. And they also, like I said, have decent diversification, operating in 2 North American countries, and also have the AI data center pivot or diversification also. We also do then have some sector and market analysis comments. What I'd really like to draw your attention to, obviously, is the halving. So as everyone knows, with Bitcoin, every few years, the amount that is able to be mined halves. So we're currently around 900 Bitcoin per day, and this is expected to then obviously halve to around 450 Bitcoin. So unless prices significantly rise to then match the halving, you will expect to see a lot of inefficient miners kind of fall away, which, to be fair, then adds a lot more space for IREN to continue to increase its market share of the amount of Bitcoin it can mine. But it's also just worth flagging that then the amount of Bitcoin does fall, and so if the price doesn't rise in tandem, it can cause some issues, especially with profitability. Lastly then, in this section, looking at the future growth, IREN is expected to increase its current 50 exahashes per second to around 100 as it fully builds out its sites in Texas. And it's also actually looking at a new campus, so the 5th location in West Texas, where it will be around 1400 megawatts. And they're also looking at other possible Asia Pacific locations locations to further diversify away from North America also. What I do want to kind of delve into though is the sector analysis and looking at the competition. So as you'd expect, the main direct competitors are either Bitcoin miners with CleanSpark and Mara Holdings being the two big competitors, and also Riot I think is a very, very popular name in the sector. I personally then like looking at 5 key metrics as highlighted here with the color coding and the color blocks I do. So I like to look at 2 valuation metrics being forward EV to sales and forward PE. The reason I like looking at forward metrics is obviously with trading, we want to be forward looking and not looking at any historical information really. And so these 2 metrics, looking at the top line and the bottom line of a company, I find usually covers the key performance of a business. And then in tandem with that, then we like to look at the growth numbers. So again, the top line and the bottom line growth, revenue and earnings. And then I also like chucking in net loss or usually net profit figures in there, just to look at then the current as at position of a company and the profitability of a business. Kind of adds more context and clarity to the other 4 figures. Looking at IREN then, they are what I would define as a premium sector outlier in that their valuation multiples are higher than the sector average, with a forward EV to sales of around 8, which is a slightly higher than sector average, and a significantly higher forward PE ratio of 60 versus sector average of around 20. So this essentially just indicates that the market values IREN at a premium versus the rest of the sector, which to be fair I think is reasonable. Although the revenue growth is below the sector average at around 35%, a 35% revenue growth is still very strong. And also when you factor in, it also has one of the higher revenue figures in the sector. I think an 8 forward to EV sales ratio is respectable. And then obviously when you look into the earnings growth being at 200% and well above the sector average, the 60 forward PE ratio makes sense. Also in tandem then with the net loss percentage of only 10%. It's by far the least, loss-making company in the sector. So the forward PE ratio for me, again, is quite justifiable. All right, then, before we delve into the fair value and the price target sections, quickly covering the qualitative aspects then of the business. Again, we won't delve into this too much because the video will just go on for too long. But we've got a SWOT analysis looking at the strengths, weaknesses, opportunities and threats of a business. Some extra pro tips that I give. You can kind of pause the screen here or again grab the document for yourself down below in the description. Also outline the bull and bear cases. We've already talked about the data center locations, some technical analysis. Again, don't like spending too much time on this, but it's always useful looking at the moving averages and technical indicators. And then the most recent earnings call, kind of summarize that for you guys. What I do want to focus, however, on is the management analysis in terms of the qualitative aspect of a business. For me personally, this is by far the most important aspect of qualitative analysis is the management, right? And how they're performing. Look at that for yourselves. What I do want to kind of draw your attention to, however, primarily is the insider ownership. So it's very low and quite modest at around 4% of total shares. However, it is worth noting that Roberts Brothers do hold millions in shares just via a trust, and they haven't sold any yet. So that's, I guess, a positive. And then also I just quickly wanted to flag the controversies and the red flags. So there's 3 primary controversies that I would say around the business. One being the 2022 loan default. So essentially, they took out a massive $100 million loan on some equipment and defaulted on it. But the company that defaulted wasn't actually IREN. It was a SPV or a special purpose vehicle. To be fair, what they did was actually really clever, but then quite controversial in that, they defaulted on the loan, had a class action lawsuit against them. But because it was via an SPV, IREN didn't actually get hit personally and wasn't personally liable. And so it was actually quite clever, but again, controversial. So it depends on your ethics around that. There also was some governance transparency issues, although they have, again, refreshed the board since then. And to be fair, now the governance and board issues, I think, are quite solid. And then there's also a currently ongoing trade dispute with US customs tariffs around $100 million, which, to be fair, is very material when you look at their revenue figures at the moment. But yeah, there's some dispute over the importing of mining rigs into the US. This is currently a live risk ongoing, whereas the other 2, I guess, controversies have gone and passed and pretty much been rectified, whereas the trade dispute is going on. So I think it's something to be aware of and to flag to you guys. So then, looking at the fair value and price target analysis sections, I guess the main meat and bulk of this analysis. Usually I like to value a company both on its, again, top line and bottom line, revenue and earnings. However, with a company like IREN, this is quite difficult to do. So as you can see here, within the top line and bottom line multiples I like to give, I also then like breaking it down between market and reasonable, with market being essentially the prior year multiple the company had. And so it's basically what the market's valuing the company at. And then reasonable being my own valuation multiple that I would assign to the company based on the rest of the analysis that I had done at that point. So as you can see with IREN, there is no market multiple for earnings because prior year the company wasn't profitable, so it had no earnings. And then again, the sales multiple is difficult because it's hard to assign a sales multiple to a company which has such volatile sales, given the fact that its sales and performance is so highly dependent on a commodity being Bitcoin, right? I think we can all classify Bitcoin pretty much as a digital commodity. That being said, I have kind of tried. So with the reasonables, I've given a 54 PE, which is basically my high end that I like to give to massive hyper growth tech stocks. And then again, same with a sales multiple of around 11. If you watch my other videos, usually with these high growth tech companies, I like to give these kind of multiples. That then in tandem with the prior sales multiple, which was around 9.6, about 10, gives an average stock price of around $20 a share. We then threw in the AI price target models, which again, I've talked about before in my other videos. It's just basically investing.com's pro subscription. They kind of have like AI run loads of different valuation models that you would yourself run, but for efficiency's sake it kind of cuts a lot of time in the analysis, and so they do things like DCF models and other multiples on the company, and that gives around a $15 share price target. And so as always, doing the average of all of that, we get, I guess, a price target of around $19 a share, indicating pretty much fairly valued at this point, given the share price as of the 23rd of July is around $90 itself. However, as I said, valuing the company like this on valuation multiples at this point in time, I believe isn't very applicable. And I think what would be better is doing a scenario analysis around the price of Bitcoin, right? Because a company like this is so heavily dependent on the price of Bitcoin. I think this makes the most sense in terms of trying to value it. So I made some comments here, which again, you can, pause the video and read at your own pace. But I've just basically outlining some facts that we need to know for this valuation model or scenario analysis. And then the 4 key, price points or 4 key scenarios that I've outlined is Bitcoin being at $50,000, $100,000, $250,000, okay, and then $1 million. The reason I've not gone any lower than 50k, as you'll see, is because at that point the company basically is not profitable. 100k is basically where Bitcoin is currently at as of this recording. 250 is a very, very popular, price target that a lot of Bitcoin maxis are forecasting, and $1 million again is another touted, nice round figure that a lot of ultra Bitcoin maxis are kind of gunning for. You'll also notice that as the price point goes up, the amount of Bitcoin mined is decreasing. This is primarily for prudence and acting as a natural hedge, with the fact that obviously with the price of Bitcoin as it rises, there'll be more market participants trying to mine coins. So then naturally the market share of the same amount of 900 Bitcoins a day available to a company like IREN will naturally decrease. So to factor that in, we've also then, in tandem with the price going up, the amount being mined, we've kind of tapered that down as well. Obviously within this valuation model then, we need to look at the cost side of things. And again, as I've mentioned before, the primary cost driver is energy. So we kind of had a nice spread here with 2 cents per kilowatts to around 6 cents per kilowatts. I think this is like a nice average range in terms of low end cost to high end costs. And obviously with this being a 1 year valuation in terms of 1 year outlook, we've assumed the 50 extra hashes being pretty stable and across all scenarios. Coming on to the free cash flow model then, for the Bitcoin mining segment, we also do then cover the AI HPC segment as well. But yeah, looking at the Bitcoin mining segment, clearly outline the 4K scenarios, the amount of revenue that will generate from that. The cost per Bitcoin is also then variable relative to the scenario. So for instance, in a conservative, or I guess you could basically call it a bear case scenario, we're assuming the high end energy cost. And then as we get to more to the bull case and the ultra bull case, we're forecasting, a lower cost to iron in terms of lower energy costs. We have, however, tapered up the overhead costs. So as with basically any business, as any business grows, they love, kind of adding on bloat and extra costs unnecessarily. So always trying to factor that in, which then adding on to all the total costs, being obviously the variable costs and overhead costs, we get the free cash flow figures. And so then what's super useful with this model actually then is you can clearly see that if Bitcoin was to halve to $50,000 and then the energy costs for IREN were to be at its higher end of around 6 cents per kilowatt, you'll then easily see the company essentially become cash flow negative. Even if they kind of turned off the taps and stopped the mining, if the price of Bitcoin dropped to $50,000, they still have the $120 million of overhead. So that will just basically take it from 280 million negative to 120 million dollars negative no matter what, because obviously overhead costs being fixed. We can, however, see in the base case scenario with Bitcoin hovering around $100,000 per coin, and then the variable cost being around the average of around where it currently is, we can see pretty decent free cash flow generation of 350 million. And then as you can see, this tapers up as we get more bullish. So in terms of valuing the Bitcoin mining segment then, we can do this via quite a simple free cash flow multiples. And as you can see here, the free cash multiples kind of taper down, which in my opinion does make sense, because essentially the reason for this being in the ultra bull case scenario where Bitcoin is $1 million dollars per coin, at that point the theoretical upside is pretty much negligible. I think even the most diehard Bitcoin maxis can kind of concede that fact, right? Once it's gone up another 10x, the future outlook and the future growth from that point on is quite, I guess, is quite minimal. Factoring in then that the future growth has most likely already occurred, you'd assign a lower multiple to the current free cash flow. So for the conservative and base case, I've given it a 10x free cash flow multiple. For the bull case, an 8, which is pretty standard to be fair. And then again for the ultra bull, which is very, very unlikely, but it's a 5x. This then, for the conservative case, obviously gives no valuation because it's loss making, and so you can't give a multiple on a negative. The base case then gives around $3.5 billion valuation to the Bitcoin mining segment. Bitcoin was to go 250k, it gives around 12 billion, and then so forth. And then we have the AI HPC segment. I won't go too in depth in this, but you can kind of again pause the screen and read the, I guess, logic for yourself. But the conservative would be around 75 million, which I think is very unlikely. And then the bull case is 1.8 billion. And as you can see here with the multiples, they actually taper up, which makes sense, right? Because the valuation isn't pegged to a commodity that's already experienced growth. This is actually, a service that's being provided. And so if there's more GPUs in action, you can kind of argue the company has a stronger moat and competitive advantage versus competitors, economies of scale. And so then you would then at that point actually assign a higher multiple to the future growth of the company. So consolidating all that, then we can, again, the mining segment and then the AI segment gives a total valuation here, and then dividing the total valuation by the current shares in issue gives, I guess, estimated or fair value price targets for the stock price. So in the conservative scenario, I'd give it around $6 a share, which indicates significant downside of around 65%. Also, when you factor in, then the Bitcoin would be essentially just over halving. This is slightly leveraged in terms of the downside. The base case kind of makes sense, right? So I'd say it's currently 10% overvalued, which also links into the valuation multiples we gave, which again is around fairly valued, so it's not too far off. And I'll say this is probably the most likely scenario, especially with Bitcoin staying around $100,000 per coin. If, however, you are highly bullish on Bitcoin and you're essentially like, Bitcoin maxi, and you believe, 250k within the next 12 months is quite reasonable and likely to happen, then obviously, yeah, there's some significant upside to be had here of around 220%. Although I will come on to my closing thoughts here in terms of whether or not you should even buy it in that case, because again, you could just buy Bitcoin. And then obviously with the ultra bull case, there's crazy upside. Although in terms of percentage of this likely happening, I've given it probably about 1% or even less, especially within the next 12 months. Very, very unlikely. We'd probably have to see like some catastrophic geopolitical events to occur, and then everyone's just rushing in and buying Bitcoin. So the key risks and strategic considerations I've kind of outlined here. We've kind of already gone over it. Again, you can kind of pause the screen and read that for yourself. But what I want to cover finally here is the closing thoughts. So as you've likely gathered by now, IREN isn't a general tech stock play or even a broad AI play. It's first and foremost a leveraged bet on the price of Bitcoin. So if you're not bullish on Bitcoin and you hate Bitcoin, then there's literally zero reason to buy the stock, in my opinion. If, however, you are bullish on Bitcoin, then you can kind of consider potentially buying IREN. That being said, however, I believe there's a nuance to it, because current price of Bitcoin, if Bitcoin was to go up to $250,000, for instance, that's a roughly 2.5x return, which, as we've kind of mentioned here, is pretty much similar if you were to buy IREN stock, which at that point, if you're a Bitcoin maxi and the reason you're buying IREN is because they're a Bitcoin miner, you might as well just buy Bitcoin itself. And there's no point, buying the stock. This, of course, can change if the price of IREN stays relatively flat while Bitcoin continues to increase this over the next few months. Then there will become an arbitrage opportunity, as I've kind of mentioned here. But what I think buying IREN stock, if you are bullish on Bitcoin, comes down to is these primary trade-offs that I've kind of outlined here. So for instance, if you were to just buy and hold Bitcoin, you're having pure crypto exposure, which I've highlighted blue, so it's neither positive or negative. Again, it depends on your opinion. There is, however, a positive being there's no dilution risk, but then the downside being there's obviously no hedge. If the price crashes to zero, you've lost everything, right? Whereas moving on to owning IREN stock, one of the benefits is, of course, the AI data diversification. So this is essentially guaranteed cash flow coming in now. So it's a real business, right? So it's going to have real cash flow coming in. So even if the price of Bitcoin does crash, they can essentially turn off the taps of their data centers, incur the overhead costs, so they still will be loss making for that segment, but it'll be much less than obviously if the price of Bitcoin was to crash 60, 70, 80%. So you do have, I guess, limited downside risk in that regard if management were to basically cut off the taps on the mining rigs, and then you do then have the AI data centers, that cash flow coming in. So you could argue the downside risk is actually cut and much lower than being fully exposed to just Bitcoin itself. However, there is obviously downside risk to owning IREN, given there's operational risk. So as we mentioned within the management analysis, things like loan defaults, trade disputes, typical business and operational risk, there is that to consider. And then there's also, like I said here, dilution risk, right? So the company can continue to issue shares, diluting your share of the business, which, as we can see here, in 2022 they had 50 million shares in issue, and in 2025 they now have 220 million shares in issue. Of course, this can be a net positive if then that money that they've raised from the equity financing is then used to buy more mining rigs and more data centers, which then obviously increases the total pie. So then while your share of the pie kind of comes down, the total pie obviously increases. As you can see, here's what they're expecting. To go from $200 million in revenue to just under $1 billion in about 3-4 years is quite insane, to be fair. So I'll leave the video there. As always, if you have any questions, you can leave them down below in the comments.